What is going on, everybody? Welcome back to another video. In this video, I kind of want to explain why, again, I'm not a financial advisor whatsoever, but in this video, I do want to cover why I just picked up more shares of Qyld. So with that being said, let's go ahead, cue the intro, and jump into this one. I've been getting dirty money. Okay guys, so you guys all know I'm big on dividend investing, and I like to look at the overall chart. So I'm going to go over here to Max and kind of look at this. So again, I'm going to tell you today, as in January 28th at the market open today, I picked up shares of Qyld. Now, why did I do that? I think this is the easiest way to explain this and it's not saying buying the dip is my strategy. My strategy, honestly, is when I'm leveraging more cash into the market, even if I think that there's going to be a crash and I'm going to eventually pull out of it, whatever the case may be, I still need income. And again, there are other stocks that I buy that have quarterly dividends and things like that I don't really care as much about, and they're there for the growth. But this one is particularly for income, and that's the only thing I care about with Qyld. So when I do that, is I want to get it at of course, the cheapest price so I can get more shares. Why wouldn't you? So this one today, and why I bought some today, and again, I may not have got the bottom. I'm not trying to call the bottom. I'm trying to call where I feel like it's safe to buy. And I think that's what a lot more people should start doing. So you can see back in 2020 when everything went to crap, the low was $18.23, which was almost $18 basically is what I'm going to call it. Today, we were below 19 when the market actually opened. It actually got down to 1989. And then if we go to a one-day chart, you're going to see that it ended up at 10 a.m. It was around 1974. So again, we got a little bit of a drop. 1982, I think my average buy-in was at market open at like 1999, it looks like. So I got it just below $20. And now today we're back up. Now I'm not saying that we're going to continue to go up, but again, I like the feeling that, I'm buying it at $20. The low is 17. So worst case scenario is I'm going to lose $3 per share, which is okay, because I expect to get more than that back in return from Qyld over the years in income. And that's where I'm okay with putting some money into it. Am I going to get some capital depreciation or appreciation? Sure, that's a possibility. But when I put money into this, I know I'm only looking at it for income in the future. I care about what the stock price is. I don't want to invest in things that only go down. But as you can see, if you look at the max, Qyld does continuously go up with the market, and then of course it gets slammed like everything else when the market goes down, and then of course we're building all the way back up. So if I'm buying near the bottom, I'm okay with that. And again, if it goes down to that low of ever, like it did in 2020, I'm probably going to pick up even more shares. I'm probably going to pick up more shares over the next weeks if it does continue to go down like the market, or like everybody seems to think that the market's going to do. So I'm not scared to go on ahead and add some more shares here. I do think that this is a great buy if you're looking for income in your near future. As long as you have a DRIP account and things like that, which is a dividend reinvestment plan on your account, Qyld is going to give you money every single month, and it's going to be a solid little return. Now, again, it does vary month to month, but Qyld has kind of proven itself to be a solid monthly dividend income earner, and I like it. So I did add some shares, and I have no problem with telling people about this stock whatsoever, just because, again, but you got to be clear what your goals are. Is your goal to have this continuously just continue to go up and up and up like it used to? Or are you wanting it something that's completely going down? Because again, Qyld does consistently go back up and never quite hit its high that it was at almost 24.11. But again, we've gotten to 23.50 almost, and consistently getting back up into that $23 range, 22.5, and I think that that's a solid play. So if I'm buying it at $19.90 or $20 even, I'm okay with it continually to go up. That being said, guys, I don't want to make this video very long. I hope this helps somebody. And yes, I did buy some Qyld today. I'm probably going to continue to add some shares here. I hope this helps somebody. And we're going to look at the dividend history here really fast. Because again, $20.35 after market. Again, it's unchanged. The dividend, monthly dividend, is very consistent. We've been about at that 18 cents, I think, is the average, sometimes a little over. This was a special dividend right here. Again, do your research, know where you're at with Qyld. I think if you're going to invest some money and you want that monthly income, I don't think that this is a bad choice whatsoever. And I hope that this video did help somebody and help somebody make a decision on whether they really want to pull the trigger or not on buying stock. So with that being said, thank you guys, and I will see you in the next one.